Your dream home is within reach, but the world of mortgages can seem like a maze. Well, today in this video, we're going to cover the basics and we're going to decode the whole journey and making sure that this is a very smooth process for you in getting a mortgage. What's going on, everybody? Kyle Powers here with Haven Real Estate Group at eXp Realty. K-State grad, turned contractor, turned real estate agent and investor. Right off the bat, I want to make sure that you understand I am not a lender. I am a real estate agent, but I also wanted to talk a little bit about mortgages so you kind of get an idea of what it looks like from my side of things. And then also so that you kind of hopefully understand a little bit better of what a real estate mortgage is and what we can do for you. So let's go ahead and jump right in. What's going on, everybody? Thank you so much for watching. I really do appreciate it. Here, let's just go ahead and jump right in with it and say, what is a mortgage? So a mortgage, as simply as I can put it, is something saying, hey, we're going to give you money to go purchase a house. That house that you're particularly purchasing, that is what you're putting up as collateral for that particular mortgage. So if you're buying a $200,000, $300,000, $400,000 house, we have to have those appraisals and things like that come with it, but it's against that particular home. So technically you own it, but you also own it with the bank and they have those liens on that particular home. There are a slew of different types of mortgages and different things that you can dive into, but what I'm going to talk about a little bit is just looking at a couple of different ones that are really mainly the popular ones. But what I'm going to talk to you about is fixed rate mortgages. That's when we have an actual fixed rate. When you see these interest rates and all that stuff flying out there and everywhere that there might be something about fixed rates and things like that, that's what they're talking about. Whatever that percentage is, that's typically a fixed rate. And that one will stay that way for 15, 20, 30 years, however long you have that particular mortgage for. There is also one that's called an adjustable rate mortgage. And with an adjustable rate mortgage, typically the terms change, right? Like you have to be aware of that part of it. But let's just say some of them go for fixed for 5 years. And once you hit that 5-year mark, once you've owned that home for 5 years, then they can adjust that rate. They can go up. Typically they go up because they're going to take advantage of that part of it, right? Sometimes you do get some better advantages, some better things that way because they know long term that if you keep that rate, keep that mortgage, you're going to adjust that rate and it's going to change things quite a bit. Be careful with these because if you think you're getting a fixed mortgage but you're actually getting an adjustable rate, that's something that's completely different. So be careful of that because I have had a lot of clients in the past who have kind of gotten stuck with some of those, so I don't want to see you get burned with something like that. Okay, so those are typically conventional mortgages. That's typically what you see there. Now I'm going to switch to what is a different types. Again, is more of an FHA, a VA loan, or a USDA loan. Those are 3 subsidiary mortgages, things like that. VA and FHA are typically low, and so is USDA, typically low to no money down. There are specific requirements and things that you have to be aware of with those as well. So make sure if you're not working with me, make sure you are working with a real estate professional that understands that piece, and or make sure you understand that your lender can explain that to you as well. The other thing about these subsidiary loans or these FHA, VA, and USDA loans is that these are government-backed loans. That way you have a better opportunity, or it gives a little bit more leniency with some of that stuff. So the government does do some things that are good for us when it comes to this side of it. Next thing I want to talk to you about is interest. So interest is essentially just the cost of borrowing money, right? So you're going to have a particular interest. That's where you get these interest rates. And so whether it's the lows where everybody was talking about, still talking about today, where it's like 2.75% and all that stuff, they're particularly collecting interest on that particular loan for what you owe on that house. The things that will mess with your interest rate a little bit are going to be a couple different things. They're going to look at your credit score. That's where everyone always talks to you and asks you about credit scores and things like that. Then they're also going to talk to you about your loan duration. So are you looking at a 15-year versus a 30-year? Then are you also, what's the economy doing right now, right? So as we go through this stuff and as you have that part where the rates kind of fluctuate and go up and down quite a bit, wherever you catch that, that's kind of where it depends on where that economic impact comes in with that part of it, right? So I will tell you guys that everyone always gets hung up on like, oh, my interest rate's this or my interest rate's that. It's important, right? Like I don't want anybody to be house poor, but that's the thing is that just because you're 30-year fixed or a 15-year fixed doesn't mean that you can't go in if the rates change or go change to do something different. Doesn't mean that you can't refinance or sell the house or go that direction with it. Like there's all kinds of facets that come into that piece of that. And so that's, I think, one of the big things I want to convey to you about interest rates in general is that yes, they are important. Yes, they do affect your payment by quite a bit. However, it isn't necessarily a life of the loan kind of thing, because there are ways that you can kind of work through that. Real quick, I just want to say, if you do enjoy this content, or if you do have any questions, one, put it in the comments below. I'd love to hear from you. Two, go ahead and hit that subscribe button. Go and hit that little bell so you get notified of any future content, and give us a quick like because it does help us with the channel. Let's go ahead and jump right back. Next thing I want to talk about is a down payment. Everyone always comes to me at that way. This is your initial investment into your home. Okay, so this is where that really comes to play with, you know, how much money do you have in order to go purchase a home, right? What type of loan are you doing? Are you doing an FHA loan with low money down? Are you doing a VA loan with no money down? Are you doing a 5%, 10%, 20% conventional loan, right? There's all kinds of opportunities within this that you can work those numbers to be within your favor. Obviously, if you put down 5%, your payment's gonna be a little bit higher than if you put down 20%, because you're getting a loan for more on the 5% down versus the 20%. When you do the 5% down, there are some additional charges and things that come with that, so be aware of that. You know, you've got PMI, which is your private mortgage insurance, so be aware of the opportunity or the fact that may come in there. So just know what you're getting into when those costs do come down. Some of the benefits of you getting a larger down payment is that you do get some interest rate breaks and get some things on that side of it. But I'll also sit here and tell you is that the benefit of jumping into the market sooner than later is definitely outweighs the benefits of what you could have there, because you have that opportunity to lower your payment later on down the way. But if you never jump in and you're a renter for the rest of your life, that's something that you got to be aware of, right? Like if you're paying $1,000 a month for rent, let's just say that for easy math, well, that's $12,000 a year, right? So now how many years have you been there? 2 years? Okay, there's 24,000. 3? Okay, there's 36,000. But how quickly could you have made that money back in equity, right? And there's different levels of that part of it. I'm not going to say that buying a house is for everybody, because it's not. I want you to be sure and be ready to go on that side of it. But understanding that differences of what you have, that difference in opportunity, is very important to looking at that stuff, right? So again, that's $36,000 that you will never get back, ever. Right? You might as well throw that in the trash can, versus $36,000 that you put 5% down on. Now those 3 years, you've actually built equity into it by making the same payment or a similar payment, right? So pay attention to those numbers and look at that, because that's the part that everyone always doesn't necessarily think about, because you're paying a rent, right? You're paying somebody's mortgage payment. It just may not be your own. Next thing on the list is going to be the additional costs, or let's call them the ghost costs, of buying a home. What I want to talk to you about with it is that there are additional fees and additional things that come with that, right? So don't just think like, oh, I just got to make my down payment and I'm good. No, you are going to have some additional costs. You're going to have lender fees. You're going to have fees along those lines. You're going to have title fees. You're going to have things like that do pop up that you want to be able to make sure you're aware of. Appraisal is one of those things. I call these our closing costs, right? So you're going to have all of those things that are going to be included with that, and they vary depending on the house you buy, depending on where you buy at, all of those things. Taxes and insurance, that's another couple of things that you need to be aware of. These also go into escrow and actually kind of make up the last part of your payment, what your monthly payment will be. So just be aware of that. You're looking typically, I don't want to give numbers because it may change over the years, but here's the thing, is you're looking at more than a couple of $1,000s. So make sure you're aware of the down payment plus your closing costs. If you have questions about it, go ahead and reach out to me. I'd love to help you out and kind of dive into that a little bit more for you, or put it in the comments below. I'd love to get you taken care of on that end of it as well. I want to tell you guys that owning a home is a major step. It's a big step. It does not have to be overwhelming. I promise you. One of my favorite things to do with people, especially first-time home buyers, is educating them through that process of buying a home and helping you out, making sure you are making the right decision for you, for your family, and making sure that you are here and having a good experience with that one. I literally just closed one today that it was their first home. It's a beautiful home, but we got them into it. We got them in with ironically enough, with a VA loan, and we were able to get them into it in a payment that still makes sense. And again, as the time of recording this video, interest rates are still considered high with everybody, but that's the thing, right? We put them into a home that they were able to afford. They're not gonna stretch themselves. They're not gonna go that route. They have, because becoming house poor is a real thing. So it can be overwhelming. It does not have to be if you get with a real estate agent that actually will help you through the process. Again, hopefully that's me if you're moving to the Manhattan area, I would love to help you out. If you do have any questions about it, put it in the comments below. I'd love to hear from you. And as always, you can always reach out to me. If you've got somebody looking to buy, sell, invest, or anything real estate related, I'm here to help. I want to make sure you get you taken care of. My phone number is 785-477-5485. My email is kyle@homesforsalemhk.com. And as always, if you do enjoy this content and you want to see more of it, I would love it if you can hit that subscribe button. Go and hit that little bell so you get notified of any future content, and give us that like because it does help us grow the channel. And then again, just because you're not coming to Manhattan doesn't mean that you can't share this video with somebody who might be particularly interested in buying a home, because I can help them out with referring them to a good agent in their particular area as well. So that's all I have for you today. Thank you so much for sticking with me this long. I really do appreciate it. As always, I look forward for you looking at the next video that we have. So again, thank you so much. I hope you enjoyed it. We'll see you next time.